The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlear, along with Accunet Mortgage and Accunet Realty Advisors, owner and president Brian Wickert. As always, if you have a question or a comment, you can reach us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620. So we got a big football night here in front of us, but we've got a big week in front of us for Janet Yellen and the Fed.
Yes, we do, Steve. We've got the Fed meeting coming up this week. They meet for 2 days on Tuesday, September 20th, my older brother's birthday, by the way. Happy birthday, David. And then on the 21st is when they come out at 1 o'clock our time, and they make their announcement as to whether or not they're going to raise rates. And David's here again this week. David, good morning, David. What are the current chances, according to the Fed Funds Future Market?
12% odds that the Fed will raise rates this week.
Okay, well, that's not very high. And no. It had been as high as about 25% a couple weeks ago.
Yes.
And in the meantime, we've had some economic news that has tamped down expectations. We had retail sales come in. That's the most recent number, which is super important because it's 67%, almost 70% of America's economy depends on, Steve, you, me, David, all of our listeners spending money.
Yep.
And that came in a little lighter than expected. So that, again, tamped down the market's expectations. But that's exactly why I think Brian Wickert's going to go out on a limb here. I think they're going to raise rates this week because nobody's expecting it.
I'll take the other side of that.
They're going to throw a curveball.
Why not? Because they can't. The common thinking is their next meeting is in November, literally right before the election. And so they typically sit on their hands. And then, so they'd have to wait until December to do something. So why not give it a little goose right now, raise rates a quarter? Because then they can always lower it. That's my thought process. Quickly, David sent me an article on international rates, and this is a reminder. Why are mortgage rates and interest rates in America still so low? The answer is Europe. And, David, what happened with European government bond sales?
Well, this led to me going down the rabbit hole a little bit because the Italians, those bastions of economic growth, absolutely, are looking to raise about 3 billion euros worth of, wait for it, 50-year bonds.
Not 10-year treasuries, not 30-year treasuries. 50.
Yeah, would you like to give the Italians money for half a century?
Well, it would depend on the rate, David. I might do it if I could lend it at, 5, 6, 7, 8%.
And I think they're trying to get a feel for what the market might be, but this is in comparison to the Belgians and the Irish recently placed bonds, a small placement for, wait for it, 1 century.
100 years. We'll give you your money back in 100 years.
Exactly.
Wow.
So you could give the Irish government money, and they were going to pay you a yield of 2.35% for 100 years.
Whoa.
And the Belgians could pay you 2.3%. You'd get that money back in the year 2116.
Nice. What about the Spanish? Do they do 50?
So, and this is the comparison point for the Italians because the Italians are in the pigs. In the Portugal, Italy, Greece, and Spain, the pigs of the European economy. The Spanish placed money earlier this year for 50 years at 3.45%.
And what does Uncle Sam borrow money for, David? For 30 years. That's the longest bond we issue.
Yeah, it's about 2.44%.
All right, so see, folks, everybody out there, it's like, what? America, Uncle Sam here, we're the largest economy, $17 trillion, still AAA rated by somebody. We get to pay 2.35%.
Yes.
But Italy gets to borrow money at
less.
Yeah. For longer.
Right.
Okay, so this is why you have money. It's like, gosh, and remember, pigs, those were the countries that we thought were going to go under, Steve.
Yes.
not just a couple years ago.
The Greeks were the one who created Grexit before there was Brexit.
That's right. So it's the fact that interest rates are so darn low in Europe.
Well, and it adds to the math of the Fed being like, well, shoot, if everyone else in the world is borrowing money at a little bit cheaper, than it's just part of their calculations for like, can we raise rates? Can we not raise rates?
Yeah, all right. They're probably not going to raise rates, but I'm going to still go. I'm going to keep my.
You're backtracking on your.
I'm just kind of saying it's a long shot. It's a long shot. All right, but still, the bottom line is they're not lowering rates. That's for sure.
Brian's trying to be our contrarian.
Exactly. They will raise rates eventually, and just as a reminder, everybody, when they do raise rates, everybody's home equity line of credit will go up
the next month.
Yes. Because everything's tied to the prime rate. And I had a guy, ask, hey, should I borrow money on my home equity loan to do this remodel, or should I refinance my first mortgage?
Yeah.
Well, and the answer is it depends. Do you want to have a locked-in fixed rate? Then refinance your first mortgage.
Yes.
If you want to have that rate variable and it's going to go in one direction, up, then go ahead and put on your home equity line. So this particular person chose to refinance his first mortgage because guess what? We could give him the same rate that he has now because rates are still ridiculously low.
Yes.
And lock that in for a long time. All right, when we come back, I've got two stories about how renting out your primary residence can wreak havoc on your ability to get a mortgage when we come back.
Right here on the Accunet Mortgage and Realty Show. And if you have a question for Brian or David, you can reach us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, the Brewers wrap up the series against the division rival Chicago Cubs today, and we'll have it for you here on WTMJ. Jeff Levering and Lane Grindle will begin our coverage coming from Wrigley Field at 12:45 this afternoon here on WTMJ. We're in the midst of the Accunet Mortgage and Realty Show here on 620 WTMJ. And now to the subject of renting out your primary residence and how that can affect your ability to get a mortgage.
Right. So, with the...
Welcome to the age of Airbnb.
Exactly. I was just going to say, we could rent out our house. We live out here in Heartland. We got the PGA thing coming to Erin Hills.
Yep.
Maybe we should rent out our house on Airbnb or something like that.
Only if I get a couple golf tips.
Okay, VRBO or what have you. Okay, well, here's the problem. David sent me an article a week or two ago from the Wall Street Journal. What did it say, David?
Just that the income or the acknowledgement that you are renting out your primary residence is kind of impacting what you qualify for. Or at least the way your house is classified in the eyes of the mortgage underwriting
That's
world.
right. So when you come in for a mortgage, there are three types of occupancy that you can have. Primary residence, that's where you live. Second home, I go on vacation there.
My place up in Rhinelander.
And both of those mean you're not renting it.
Yes.
And then the other category is non-owner occupied, which happens to include rental income. So what you have are these people showing rental income from Airbnb on their tax returns, on Schedule E, it's called. And then all of a sudden we go, oh, wait, you're renting out what you're claiming to be your primary residence. Gee, I don't think we can give you that really good primary residence rate anymore. Okay, so...
Because it's a measurement of risk.
Correct.
Investment properties are viewed as more risky than your primary residence.
There you go. That's very good. And so we've actually had one case of that, of a fellow down in Florida, where he had bought a single-family home for $150,000. Then he discovered, because it's in the Orlando area, he could start renting it out for a pretty penny. And then he was while he was renting out that house, he was living with his significant other. Okay, so it's like, well, wait a minute. What's your primary residence? It's not that one anymore. That's now a rental property. So we have an actual case where that spoiled his opportunity to refinance that single-family house. Then he came back to us and said, you know what, I'm going to buy a $90,000 condo, and I'm going to live in it. I'm like, wait a minute, I don't think that's going to fly because, we gave you that loan on the $150,000 single-family house as an owner-occupied. Then you turned around and started renting it. Now you want to buy a less valuable condo, and you want us to believe that you're going to live in that?
Is part of this a human element in underwriting, where it's just like, I don't believe you that that this is gonna be your primary residence in a smaller house in a less valuable piece of property?
Correct. Okay. It is human, but there is still a judgment of, do I really believe the occupancy on this house? All right, well, I'm just going to give you the setup for this next story because it's a little different. It's a complicated case where we had a borrower call up to say, I want to get pre-approved to buy a house. They jumped the gun and wrote the offer before we could complete the rock-solid pre-approval process. And in this case, what bit us in the behind was that he was getting rental income on his former primary residence and wasn't reporting it on his tax returns. We'll tell you how that story ended up when we come back from this next break.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Helping you get your dream home for your dream budget on the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Former Today's TMJ4 anchor Mike Jacobs retired from the news desk beginning at 2015, but he still remains a familiar figure in the Milwaukee community, and he reflects on the recent unrest in Sherman Park and the recent 15th anniversary of 9/11, and also shares more memories coming up here with John McCure during this weekend's edition of WTMJ Conversations. That starts at 11:07 this morning. So if you are thinking you might want to rent out your primary residence, maybe through Airbnb or whatever, even though you got that mortgage under the auspices of it's my primary residence, you can really hamstring yourself up here.
Yeah, you definitely. We have a case in the
We may have a connection issue with Brian and David here as we focus in on the Accunet Mortgage and Realty Hour on stories of renting out your primary residence and how that can wreak havoc on your ability to get a mortgage. You know, when you take out a mortgage under the belief that that's going to be your primary residence, and then you decide to rent it out, whether that's like an Airbnb situation or you're renting it out
might be back on
all the time. Here we go. There we go, David.
All right. Can you hear me now?
We got you here.
Okay, so we have this opposite case
whereby our borrower had to be transferred. He worked for the federal government, lived in Milwaukee, primary residence. Then he got transferred to Illinois for, let's say, a year. Now, his accountant advised him, because he had his ex-girlfriend move into this house, and she started to make payments directly to his mortgage lender. Okay? Not sending checks to our borrower, but instead she was sending checks right to the mortgage lender. So his accountant says, don't report that as rental income because she's not paying the money to you. Therefore, when we went to get his tax returns for 2015, it didn't show any rental income. Does that make sense?
Yeah.
Yep, okay. Well, now he moves back to Milwaukee, and he wants to buy a little bigger house, a 3-bedroom house, that he does, in fact, intend to occupy as his primary residence, but he did it, before we could complete the rock-solid pre-approval process, so he kind of jumped the gun. We'll come back to that. But here's the rub. To qualify for the mortgage on the new property, we need to use some rental income to offset the payment on his old primary residence that he had his ex-girlfriend living in. So now, all of a sudden, not really surprisingly, the Freddie Mac loan servicer where we wanted to place his loan for the new loan says, sorry, there's no rental income on the tax return. Your loan's denied. Whoa. Kind of a problem. So that's when I get involved. I would have been monitoring the situation. I knew what was going on. But when things go off the track like this, that's when I become the chief borrower advocate, problem solver. And so what I did is wrote a nice memo to the senior vice president of underwriting at that Freddie Mac servicer, which, by the way, let me point out that if this person had gone to half the banks in America, they'd still have a denied loan because Fannie Mae will only allow a debt-to-income ratio of up to 45%. And once we were able to convince the Freddie Mac servicer that we could give them 12 months' worth of canceled checks from the ex-girlfriend, so thankfully the ex-girlfriend was very cooperative, showing that she had made the mortgage payment directly to the mortgage company instead of him reporting the income on his tax return, we were able to then use that rental income, but just squeak in with a 49.77% debt-to-income ratio. And it was That's what you call a squeaker. But the takeaway here is that, not everybody can do a 5% down loan with a 49.77% debt-to-income ratio. You can only do that if you have the ability to do a Freddie Mac loan, which we do, but not every bank does. Believe me, probably more than half the banks only sell to Fannie Mae and don't sell to Freddie Mac. So that's one thing. But the other big takeaway is it would have been really nice had this person allowed us to complete the rock-solid pre-approval process, because we were going to send in all of his, income, asset, all this documentation would have gotten squared away before he wrote the offer, right? But instead he got excited, wrote the offer before we had the chance to do our homework. And that just made it a little bit more exciting, not necessarily in a good way. But the happy news is they closed on Friday. So happy ending on that one, but not without some scariness in the meantime. All right, so when we come back here after the 10:30 news, I do have the August home sale numbers that I want to go over quickly, because we have a ray of sunshine if you're a home buyer, and things are looking a little bit better. I've been talking about that in our advertising, but now we've got some numbers to actually prove that up, that the supply situation's getting a little bit better. And then also, before here in the second half of the show, I should say, we're going to have the 10 Commandments of home buying. Thou shalt not this and that and the other thing, and it's kind of clever. I think you'll like it. We'll have all that when we come back from our break here at the bottom of the hour.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ. It's now 10:30 as we head over to the WTMJ 24-hour newsroom and an update with Colleen Bolden.
Thank you, Steve. New York Governor Andrew Cuomo getting a first-hand look at the damage from the blast that went off in New York City last night. The governor calling the incident an act of terror and vowing that the individuals or groups responsible for the blast will be caught.
We will find whoever did this or whatever group did this, and they will be brought to justice.
The governor says the blast caused extensive damage. It's fortunate no lives were lost. A man's being treated for burn injuries after police say he was set on fire. Milwaukee police say it happened during an apparent drug-related robbery near 53rd and Center last night. Police say the victim may have known the people who set him on fire. No arrests have been made. And the makers of prescription painkillers say they're combating the addiction epidemic, but the AP and the Center for Public Integrity have found they often employ a playbook of delay and defend against efforts to restrict the drugs. Drug makers have adopted a 50-state strategy that includes hundreds of lobbyists and millions in campaign contributions to help kill or weaken measures aimed at stemming the tide of prescription opioids. WTMJ, PellaWI.com, time saver traffic. 94 inbound, Highway 16 to the Zoo is 10 minutes. The Zoo to the Marquette is 7. And there are no other significant delays reported on area roadways.
The WTMJ 5-day forecast for this morning, maybe a little patchy fog, but soon bright sunshine, lots of sun through our Sunday. A perfect day, a high temperature of 78. Tonight, mainly clear and a low temperature of 63. Monday, partly cloudy and warm with a slight chance of storms and a high of 84. Tuesday, mostly sunny, another great day, a high of 78. Wednesday, partly cloudy, chance of storms in the afternoon with a high of 80. And Thursday, scattered showers and thunderstorms and a high of 76. I'm Storm Team 4 meteorologist Brian Wickert.
In Watertown, it's 66 degrees. In Grafton, 71. In Milwaukee, it's 67 degrees. Watch today's TMJ4 News for your complete Storm Team forecast. I'm Colleen Boland, News Radio 620 WTMJ.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ. Still to come, the 10 Commandments of buying a mortgage here on the Accunet Mortgage and Realty Show.
Or buying a home.
Yeah.
You know, we'll do buying a home relative to financing the mortgage. It's all connected. Hey, so we
10 Commandments of getting a mortgage.
Yeah, you know. That's all right. Hey, here's the good news. In August, in the 5-county southeastern Wisconsin area, the metropolitan area, as we like to call it, single-family home sales were up again compared to a year ago. We had 1,831 single-family homes sell. That's 77 more than a year earlier, and that's a 4.4% increase. David, the median sales price was also up 4.6%, $211,500. Does that mean that everybody's house in the Milwaukee area went up by 4.6%, Dave?
No.
No,
I'm sorry.
The median sales price, as we try to say every time we mention it, is a very blunt instrument, a blunt measurement.
Why do you like that more than the average? Or it's just different?
Well, for two reasons. I think, I don't like it at all, okay, because the better number that we shared the last time we had a show 2 weeks ago was the paired sales Federal Housing Finance Authority.
The same house selling.
The same house, yeah, because that takes into account, all the attributes of the house. The median is better than the average because the fact that we had a $3.75 million sale in the 5-county area drags up the average.
Sure.
It pulls that average up.
Okay.
As opposed to the median where you're just saying half the home sales.
What's in the middle?
Right, occurred above and below. So there's your little math refresher for this week on the Accunet Mortgage and Realty Show. But the problem is it doesn't tell you what types of homes sold, the size, the square footage, the number of bathrooms or bedrooms, which is why it's not reliable. Nonetheless, you'd still rather see it go up than go down. All right, so to put August in perspective at 831 homes, that's 100 fewer than July. That's seasonal. Okay, it's 200 fewer than the peak home sales month that we have in Wisconsin, which is June. All right, but here's the best news. 1,831 homes sold. 2,166 homeowners decided to list their homes for sale.
I think they call that inventory.
Inventory, right. So inventory went up.
Wow.
All right, so now as a quick refresher, how do we measure inventory, you ask? We take the number of homes listed for sale, and we divide it by the number of homes that sold. And the rule of thumb is if you're 3 or under, that's definitely a seller's market, right, because there's short supply, only a 3-month supply. If you're 3 to 6, that's more balanced. If you're over 6 months supply, then it's a buyer's market. All right, so here's some fun facts in that regard. If you are in the 160,000 all the way up to 349.9, there's less than a 3-month supply. So at least as of August. Now that's going to cool off in September. There won't be as many homes that sell in September. Mm-hmm. But when you look at August, that was definitely still a seller's market because everything was under 3 months. 2.9, 2.5 month supply. Okay?
The good ones go quick.
Now, if you're in the 350 to 399.9, it's a 3.2 month supply. All right? That's a little more balanced. And by the way, it took you an average of 2.6 months to get an offer. Okay. I know David just shaking his head over there.
Okay.
Can't believe that that's really true, but it is. If you're in the 400 to 449 price range, now we're at 3.8 month supply, kind of climbing up in that range of balanced between buyer and seller, and it took you 2.8 months to sell your house. If you're in the 450 to 499 price range, 5 month supply, took you 3.5 months to sell. 500 to 740.
No, you said 3.5 to get an offer.
To get an offer. You're right. Okay. And then another 30 days to sell.
Okay.
All right. You think, wow, you're listening. That's good.
I'm not just a pretty face. Come on.
So it took you 4.5 months, to get from posting the sign to the closing table.
Yeah.
Okay. And then now
you're in rarefied air.
Well, wait. There's more. When you're in the 500 to 750 price range, now it's a 7.2 month supply.
Okay.
Takes you 4.5 months to get your offer. And then another 30 days, you're solidly almost at a half a year. And then if you're in the 750 to million price range, 18.5 month supply. Definitely a buyer's market.
Be patient.
By the way, only 11 people actually made it to the closing table in that 750 to 999 price range in the month of August.
11.
So if you've got your house listed for sale and you're not getting any offers, there just aren't that many buyers. But wait, if you're in the million and up, there's a 20-month supply, and it took the winners 9.5 months to get an offer, those who got offers in the month of August. So obviously, as the price of the home goes up, you have fewer eligible buyers. It's just going to take you longer. But it also means you have to do everything you can to be the most attractive version of yourself relative to the price. When you flip over to the condo market was also strong. In August, condo sales were up at 11%. There were 384 condo sales. But there we seem to have a little bit of a supply problem because listings were exactly the same as a year prior. So seems like there's a little bit tightening up in terms of the condo market. So all in all, I pronounce the real estate market still healthy in southeastern Wisconsin. But good news for buyers. Hey, inventory's going up. Better to buy now if you're able to. If you don't have to care about moving kids in and out of school, now's a great time to buy. But please start with a rock solid, fully verified, and guaranteed pre-approval from your friends at Accunet, and make yourself the next best thing to a cash offer. When we come back, Steve, we'll have the 10 commandments related to mortgages and buying a home.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And David Wickert is with us as well. We've got the 10 mortgage commandments when buying a home.
Okay, here we go. So I'll read, and Dad, you can give the color commentary. I'll be Al Michaels, you be Chris Collins. Right?
Okay, what's the warning? Read the warning first.
When in doubt, don't guess, give me a shout. Disobedience of any one or more of these 10 commandments in buying a house, whether by accident or on purpose, may result in extreme penalties, including the denial of your home loan. Obedience is a must. If you violate one of these, please confess now or forever hold your peace. All right, so number 1, thou shalt not change jobs, quit a job, submit a resignation, even with a 2-week notice, or become self-employed.
It's because we need to make sure that the income that we documented to approve your loan is still going to be the income at the closing table.
Which, by the way, in case you think you can quit your job and we won't find out, part of our operations process is we pick up the phone and say, hey, David's about to close on his loan. Is he still employed at Accunet Mortgage? And if your employer says, who?
That's a problem.
Yeah.
That is an immediate stop, and you have to sign an attestation at the closing saying that you haven't resigned your job or anything like that, under penalty of, imprisonment and $1 million fine. Okay, what's number 2,
All right,
Dave?
number 2, thou shalt not buy a car, truck, RV, yacht, boat, motorcycle, or van unless you plan to live in it.
Because if you do that, you might screw up your home purchase, and you'll end up having to live in the RV.
Like your example on the $49.99, if you add a car payment to that math, that's just going to push us above the limit.
That's right. Commandment number 3.
Thou shalt not use your credit cards for large ticket items or open any new accounts.
Because, again, that could mess with your debt-to-income ratio. And we're going to find that out because we do what's called a soft pull, and I think 90% of lenders got to do this. Right before you close, we say, let's see if they took out any more debt.
For those, to cast the first stone, when I was buying my house, I accidentally went out and bought some new furniture, and I told my dad, and then he was like, you can't do that.
All right.
So even the mortgage guy's son can sometimes. Anyway, thou shalt not, number 4, thou shalt not spend money you have saved for your down payment and closing costs.
That's right, because you need all that money to come to the closing. And when you can't say, I'm $5 short, could you increase my loan amount? Because the answer is probably going to be no.
No. I think this is my favorite one. Number 5, thou shalt not buy furniture before you officially have a home to put it in.
I like the way that is phrased there, and that's because, again, you're going to run up your credit card. Now, you can do these things, but you have to check with your loan consultant first.
Yes.
And what we find, just by the way, Steve, human nature is, the people that have a, single-digit debt-to-income ratio, like a 9 and an 800 credit score, and they're putting 50% down, those are the people who call. And say, is it okay?
Yeah, exactly.
Charge them again. It's like, It's the people who have the 49.7% debt-to-income ratio and, tight on everything.
Yep.
Like, what?
Yeah. I'm buying a house. I got equity.
Yeah, exactly.
Oh, and then, because guess this, somehow in big data world, when you write an offer on a house, somehow you start getting lots of mail, on things like furniture sales and 10% off. And my God, they had this great thing at Menards or whatever, at Steinhoffel's, and it's a limited time only. Resist and wait to buy the furniture until after you move in.
All right. Number 6, thou shalt not allow anyone for any reason to pull your credit, as you said, even if you are offered a 10% discount.
Mm-hmm. Yeah, that's just a bad sign, because then we're going to have to say, did you open up an account, blah, 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 blah.
Yep. All right. Number 7, thou shalt not move money around to or from bank accounts, make any large deposits into your bank account, change banks, or close any bank accounts.
All right, I'm going to explain that when we come back from this break. We'll finish up on the explanation of that, and we'll also finish up on the last three when we come back from this final break in the show.
It's the 10 mortgage commandments when buying a home here on the Accunet Mortgage and Realty Show.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Brian Wickert and David Wickert are with us here on WTMJ. We're rolling through the 10 mortgage commandments when buying a home.
Excellent.
Give me 7 one more time.
Okay, 7 again is thou shalt not move money around your bank accounts, make large deposits, change banks, or close your bank accounts. And why is that, Dad?
Because we have to prove where any of that money came from. And so what we do at Accunet Mortgage when we're working with a client and they're cooperative is we come up with a game plan up front.
Yes.
Where is the money right now?
Yes.
Because if you're saying, hey, it's in my Vanguard account, but I'm going to move it to my bank account, we have to document that movement. So any big deposits into your bank account, which typically are defined as 50% or more of your monthly income. So if your family makes, $6,000 a month gross, and we see a $4,000 deposit, ding, 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 we got to know where that came from. Okay, so if you're going to move money around, we got to know about it in advance because we're going to have to torture you a little bit and document where that came from. Number 8,
thou shalt not become a cosigner for credit for anyone or an authorized user on another account.
Yeah, if you go ahead and you say, well, yeah, I co-signed on my daughter's lease or my car loan. I didn't think that. She's making the payments. Doesn't matter. Yep. If you co-sign, you're 100% liable for the payment, and that counts in your debt-to-income ratio and can screw it up.
Number
9,
thou shalt not pay any bills late or miss any payments. Didn't we just have somebody?
Yes.
Okay.
Yeah, because let's say on a refinance.
If you refinance, please keep paying your current mortgage before we close on the new one.
We cannot include any late charges in paying off your refinances. If we do that, so this list is mainly for buying a house, but as long as we're talking about it, if we see a late charge on your payoff statement and we're like, oh, yeah, we're going to pay that when we pay off your old loan, all of a sudden now that constitutes a cash-out refinance, which pricing is a lot worse than just a normal refinance. So you got to keep making all your payments on time. And commandment number 10, Moses.
10, this is the one that gives me the most heartburn. Thou shalt not schedule your move-out date too close to your new move-in date. Mm-hmm. When it's, oh, yeah, can we close on the
Friday
new house in the morning so I can buy my,
I got the moving van set up, right? Because I'm closing my old house at 9:00. I'm moving out, and then I'm buying my new house at noon.
Yeah.
Now sometimes we have to do that, and 9 times out of 10. But let's talk about renters for a second. If you could please schedule your move for a couple of days or a week after, because what if your closing is delayed? You're just heaping more pressure on yourself.
Yes.
You might go through that. It might not even be mortgage related. You might go through the walkthrough and say, "Ooh, there's a problem. I need you to fix this before I'm willing to buy and close on the loan and buy your house." Well, now all of a sudden you told your landlord that you're moving out that same day. So if you're able to, if there's any way you can plan for a little overlap.
And the part of this is for people who are like, well, I won't have a place to live. Like, don't be afraid to be in flux. It's like if you get a hotel room for 2 nights or what have you, just to allow, like you said, allow yourself the flexibility. It's going to reduce the amount of stress for everyone getting to the closing.
Right, because, a lot of times, we're going to help Bob and Mary buy this house. Well, what if all of a sudden something comes up on that seller's end that they can't close on that date?
Yes.
Right? Who knows? Family emergency, healthcare, whatever. Stuff happens. If you can give yourself a little leeway, you're better off.
So those are the 10 commandments for buying a house, and a little bit of refinance in there as well. We'll post that on our blog at Accunet.com so you can easily reference those and know how to avoid those big potholes as you go through buying a house. Before we run out of time, I just did want to give a little rate roundup here. So as Dad, you like to say, with 25% equity and all the right stuff, Accunet can offer on a 30-year fixed-rate mortgage 3.5%. with an APR of 3.51 with just $300 in closing costs. That's pretty good.
That's really good.
That's better than giving the Denmark money for 50 years.
That's right.
If you wanted the 3.375, you'd have to pay us 0.3 of a point in order to get it. The APR is 3.39. If you want the trophy rate around the.
I recorded an advertisement
bubbler
for next week, David, where I put out there 3.125 because honestly, if you're going to be in your house 10 years or more, we can give you that super trophy rate of 3.125 on a 30-year fixed rate, $200,000, 25% equity, and all the right stuff. You'd have to pay us 1.6 points to get it. Well, we're just so allergic to paying. Have you ever paid, Steve, points on a mortgage?
Boy, yeah, I have on one house. I can't remember how many years ago it was, but yeah.
And in some markets, like in Minnesota where we do lend, people routinely pay a point. Okay, so it's only 1.625. I'm just saying, and we'll do the math for you to let you know where the break-even point is.
You got to live in this house for this many years.
7 years, typically.
All right.
But if you're like going to be, no, I'm in this house for 30, you will save like a lot of money by going there.
By the way, on a 15-year fixed, we can deliver 2.75%. APR is 2.77 with regular closing costs of $1,100. Is there a processing fee in that?
David, we don't charge a processing fee. We don't charge an underwriting fee. We don't.
Super Bowl fee or March Madness fee.
Remember, you brought it up. So compared to the nation's
we did that this week.
Largest online lender.
We went online. We went online and we just cooked up a quote and it was like $6,000 or something.
Yeah, it was crazy. Our closing costs for the same rate compared to America's largest online lender. You know the guys with the rocket. I'm not kidding you. On a $200,000 loan, at least $3,000 less.
Yes.
In part because we don't have as expensive advertising budget as they do. But at any rate, the takeaway from today's show in so many ways is really it's a good time to be out there buying. Why? Inventory is going up, at least in southeastern Wisconsin. But please don't go out there shopping or hunting for a loan without a rock-solid guaranteed, fully verified pre-approval from Accunet that comes with a $2,000 guarantee. If we can't make good after we verify your income, your down payment, and your credit on that pre-approval letter, we will pay you $1,000. We'll also pay the seller $1,000. Our pre-approval comes with a great big fat flyer on the front and with big numbers making that fact clear and auspicious to the seller. It really makes you the next best thing to a cash buyer. We're going to have off next week, but then we're back for like 4 weeks in a row, thanks to the Packers schedule. So keep your fingers crossed. I don't want to be right about the Fed increase this week, but we'll know on Wednesday whether I'm right or wrong. We'll see you in 2 weeks, Steve. Thanks a lot.
You've been listening to the Accunet Mortgage and Realty Show on 620 WTMJ. We'll check in with Colleen Boland straight ahead here in the WTMJ 24-hour newsroom.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors and not WTMJ Radio or Scripps Media Incorporated.